please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
There, that's the Nifty opening. So let's concentrate on the Nifty opening itself. Okay, well, that's the Nifty opening. So let's concentrate on the Nifty opening itself. The opening has come in the green as was the pre-market indication. 0.4 higher, 45 higher, 11,322 now, 323. So that's the start, about 0.4 higher. Likewise for the Sensex, 150 up. That's again 0.4, 37,430 thereabouts. Bank Nifty is almost shoulder to shoulder as good, 100 points up on that index, 26,540. The mid caps actually outperforming for starters, but let's see how things pan out. HDFC AMC stock is the one that catches the eye, which is down 4%. Titan also actually starting well. Let me come back to the Nifty stocks now. Titan is starting, with a 3% downtick now, nearly 4% downtick. Wipro as well, a little bit under pressure. HDFC is under pressure, about 0.5%. But that's the red list, HDFC twins. Beyond that, actually, there is a bit of green on the stocks. Coal India up 2%. Hindalco, Sun Pharma again because of the news of the dermatology medicine. Metals are looking up. Tata Steel for one is up to 1.2%. Yes Bank up 1.2%. Eicher Motors, Tata Motors, DRL, BPCL. The one feature of the rise today is that it's quite a medley of all sectors. It isn't one sector like Pharma or IT is pulling it up. It's just across the board at this point in time. So, the headline has receded a bit after opening 0.4. It is now 0.25% up. It's coming close to the 11,300 mark. So, Sudarshan, if he was waiting for the cooling off, it is really cooling. Let's see if 11,300 holds, but we're getting better.
They're doing better. The index is up about 0.5%. The market breadth is good, almost 3:1 now in favor of the advances. But I'm going to start with the losers because, that's the big story playing out, right? HDFC AMC is down 6.5% right now. Reliance Nippon Asset Management is down about 6%. CLSA put out a note where they said that the impact for HDFC AMC could be 25% on earnings and 17% impact for Reliance AMC in FY19 because of the cut in the equity AUM fees. So this is the whole pocket. Motilal Oswal is trading a bit in the red, not too much. Edelweiss is the only one that's bucking the trend. Titan is the other stock. I mean, you spoke about that. CLSA has come out with a big downgrade there. They've cut their target price quite a bit actually on Titan. It now stands at 720, so much lower than the current market price. Bank of Baroda is falling some more, so down about another 1% on Bank of Baroda. 17% gone this week, and some more consumption names under a bit of pressure. So, names like Godrej Consumers, etc. have been coming off for the last few days. But that's the list of losers. The trend is on the upside for the mid-cap index itself. So, let's talk about some of the gainers. Pharma stocks, Biocon is making, higher highs. Ajanta Pharma continues to move up. You have, mid-cap IT names like Cyient, etc. that are doing well. Some of the NBFCs like Muthoot Finance, not too bad. There's some news on Lupin's Tarapur plant as well, so keep an eye out on that. Otherwise, after the two-day fall, as you were saying, there could be some amount of recovery today. We've seen that in the initial minutes, but do you reckon that this could get sold into?
Yeah, even if it gets sold into, Sonia, perhaps from yesterday's low, there could be a bit of a bounce. I think the stock that I'm looking at right now is Bajaj Finance because that's a bit of a sentiment barometer of late, and that's had at least the first bar is looking quite good on that one. That's opened with about 0.8% gap up. So that would be one stock that I would want to track for the day purely because it's fallen so much. And at lower level, there is a bit of a buying which is emerging in this. But let me take it straight to Ashwani then. Ashwani, at these levels, is there a trade?
Well, dream on about the rally. This is not going to last 10 minutes. So, you're already almost in the red. This is a time to get short on financials. And maybe 11,250 will come in sooner than we all expect. There's clearly a weak market. I mean, I can only see red on my screen and hardly, 50-point rally on Bank Nifty, not even 20 points on the Nifty. This is your time to get short. We'll worry about what happens in expiry, but I think within the first hour, you'll be fairly red.
Okay, well, I can't take my eye off the broking, the mutual fund stocks. Nomura has cut the Reliance Nippon price by 100 rupees. I mean, it's a 50% price cut. The original target price was 315. They've brought it down to 210. That's a steep downgrade. And likewise, Morgan Stanley's cut on HDFC AMC prices also from 2050 to 1765. So those stocks are clearly struggling with the new rules. But Titan, of course, takes the cake. Sudarshan, your 10 minutes is not up. But is there any stock that you're looking for a buy or a sell?
Yes, first for the Nifty. Nifty futures made a high of 11,350, and that's the point at which we want to go long. So the market needs to cross its morning high, and we would be long at that point. If it doesn't do that, we wait patiently. Now ITC is a buying opportunity.
Sorry.
I'm sorry?
I was going to say that now the cash Nifty has gone below 11,300 mark.
Yeah, we have to be patient. Now we are looking at the futures rate, which is much more reliable for the day. That's 11,350. When the futures crosses it, I'll be long. It will make a new high for the day. ITC is a buying opportunity.
Okay, well, the merger news is still a big overhang on the PSU banks. Dena Bank is now down 7%. You have Bank of Baroda down another 2.5%. In fact, the whole PSU banking mood has gotten soured post that news. Even something like SBI, that's at least unaffected relatively, is down about 0.5%. Ashwini, how do you approach this space? I know we've spoken about it earlier, but any fresh shorting calls make sense here? And what would the big call for the day be?
Which space?
The PSU banks?
PSU banks have started a major downside yesterday, and whatever rally you had in the morning should have been used to sell, still remain short. The market is not really recovering, and you know the recoveries happen once you have a 150-point gap up on Bank Nifty, 70 points. It scares the bear. This market is asking for the bear to beat it up. So big call is remain short on Bank Nifty. I don't think global cues are impacting us, and once 11,250 is gone, I think pressure will only mount.
Okay. Well,
Mitesh, anything you want to comment on for a buy or a sell?
I think Lata, the easy trade, and that's shorting the PSU banking lot. OBC, Bank of India, and Allahabad Bank to my notice immediately.
all right, gentlemen, thanks a lot for taking us through the market opening. It's actually turning out to be a bit of a weak start because and that would happen. The first gap up would get sold into on a day like today. The key would be to see if we defend 11,250 and from there if there's any rally. But the first gap up has been sold into. Pankaj Tibrewal, Senior Vice President and Fund Manager of Kotak Mutual Fund, is with us. Pankaj, good morning. Good to talk to you. Your thoughts on the kind of volatility that we have seen? We had a big rally in August, but almost entire gains have now been wiped out with this correction in September.
So good morning, Anuj. Good morning, Lata and Sonia. I think market are at a very interesting juncture today, and there is a tug of war going between the macro concerns and the micro improvement. And clearly, at the moment, macro concerns are taking an upper hand. Clearly, if you look at our view over the next 6 to 8 months, we believe markets are likely to be volatile, led by the macro headwinds and the election, which probably would start somewhere from November, December on the state side and going up to the general election in 2019. At the best, markets could consolidate at these levels, and henceforth we believe that there is a merit to be cautious on overall markets. Valuations overall are not very cheap, and hence we believe volatility would be there in the next 6 to 8 months.
Okay. Pankaj, hi, good morning. The space to look at this morning is the entire mutual fund, the AMC basket, because SEBI has once again cut the mutual fund fees, and a lot of brokerages are talking about how the sectoral earnings could get impacted by at least 25% odd. Your own thoughts on how to approach this space?
Sonia, we are a regulated entity and we respect any verdict by the regulator. However, we believe that if you look at from an overall growth perspective, this industry has a lot of leg from growth perspective. Today we are about 13% of GDP to AUM. Globally, if you look at it's about 60-65%. So we have a long way to cover out there. But any verdict by the regulator is most welcome, and we would take all steps to comply with it in the respectable time period.
Oh yes, but it would impact earnings significantly, wouldn't it?
So it would depend on how each of the AMCs take it forward from there, how much they absorb, how much they pass it on to the distribution. It would be really the strategy of each and every individual AMC, which probably we may not be able to comment at the moment right now.
No, but in the past, they have been able to pass on everything. How do you think it might pan out? I mean, you're also an investor, and you could be holding other mutual funds in your portfolio. So how would you approach, say, an HDFC AMC or a Reliance Nippon? Some of the brokerages have cut their price targets very aggressively. For instance, Nomura on Reliance Nippon cut from 315 to 210. Likewise, HDFC AMC, an aggressive price cut coming from several brokerages. So how much can they pass on? 100%?
Lata, very difficult to say at the moment. It just happened last evening. The senior people of all the AMCs would have their own strategy for their respective AMCs. So it will not be right for me to comment anything right now.
Okay, no. So we'll just move on then. You know, we have been getting a couple of surveys as far as the discretionary demand or consumption is concerned. There are talks that the festive season could be under pressure. You know, spending could go down. You know, 40% say they won't spend anything at all. Would you be a bit cautious on some of these consumer durable names, some of the auto names ahead of the festive season, or you think it's going to be smooth this time?
Sonia, if you look at the overall consumption basket, I think staples have done extremely well, and so is discretionary over the last couple of years. And in our view, if you take a slightly longer term view, consumer discretionary is where we believe that as the per capita GDP increases, that basket is likely to see traction. In the near term, yes, with the fuel price rise, inflation a little coming back, people may cut on the discretionary part. But when you see a longer term 3 to 5 year horizon, I think we are at a very sweet spot. The AC penetration is still at 5-6%. The washing machine penetration is still in single digit. So I think there's a long runway for growth. But yes, in the near term, there could be some slowdown because the commodity inflation is back. Prices have started to increase, and that could have some dent on the pockets of the consumer. Okay. And valuations obviously are not cheap in this sector.
Okay, Pankaj, NBFCs, you know, is the big move over now, well and truly over, or you think this is a good entry opportunity?
So, Anuj, if you remember, during various discussions, we have been cautious on the NBFC space. We believe that the NBFC which are more exposed to LAP, which is loan against property, are the ones to watch out for. Also, the cost of funds, because most of them are wholesale funded, are prone to rising interest rates. And also what we are seeing in some of the other NBFCs could have a bearing on the overall space per se in terms of cost of funds and liquidity. So we remain cautious on this space, and we are very selective on owning retail-oriented NBFCs only, where liability is good and asset quality is not an issue.
Okay. What about the old theme, Pankaj, housing? Before I come to housing in cement and construction, real estate seems to be getting a look in from several brokerages. Would you look at, you know, buying the distress there?
Clearly, Lata, if you look at this space, which is housing, I think this is one area where over the next 3 to 4 years, you would see massive consolidation. You look at the NCR region, apart from 1 or 2 serious players, the entire space is vacant. And our view is that over the next 3 to 4 years, there will be about 20 to 25 pan-India players. And post-RERA, I think the space has become tough for 1 or 2 kind of project builder kind of a community, and they are going to the larger corporate builders and asking for either a joint development or a JV. So I think this space will see massive consolidation over the next 3-4 years, and that's an opportunity we believe. We are started to look at this space more from a constructive angle, and we believe that 2 or 3 players can really create wealth in this space over a longer period of time. Also, if you look at from a cement demand, despite of real estate being down, has surprised everybody with the volume digit growth being in double digits. And if you slightly dig deeper into that being in double digits, and if you slightly dig deeper into that, the Pradhan Mantri Awas Yojana has been a massive hit in rural areas. Last year we constructed about 44 lakh houses. That's not a small number. So in our view, cement and real estate as a combination could be the wealth creating opportunities over the next 3 to 4 years. But we need to be very selective in the stocks we pick in both the sectors.
Big statement, Pankaj. Wealth creation in real estate stocks as well, because they have not made wealth for some time now.
Yeah, I think this is something that Kotak has been talking about for a while, you know, the view on real estate. But I also wanted your thoughts on pharma, Pankaj, because, you know, as we speak, the pharma space is topping the charts. Sun Pharma, Cipla, Dr. Reddy's all up about 1 to 2%. In most of the funds, you don't have too many pharma names. Have you missed out on this move, or, you know, have you consciously stayed away?
So in pharma, we believe that you have to be very stock specific. We don't believe that the generic price erosion is still over. And also people are kind of comparing pharma with what the run we saw in IT. But don't forget that when owning IT at the start of the year, the valuations were far more reasonable than what it is in pharma today. The entry multiples in pharma is not as cheap as it was in IT when we started the year. So we believe that you need to be very stock specific in pharma. Yes, rupee depreciation is a great tailwind for most of the pharma companies, as 60-70% of their revenues are exposed outside India and non-INR. But you need to keep multiples in mind before entering into this space. We have selective exposure to pharma in many of our funds and different pharma stocks. Some are exposed to the domestic market and some are exposed to the US generic market.
Okay. Generally, do you think the mid-cap space has completed its underperformance after that massive outperformance last year? Is it giving you a feeling that you can pick more winners in the mid-cap space than large-cap space for the next 12 months?
So Lata, till last year we were extremely cautious because the opportunities had shrunk and valuations had become very expensive. But if you look at this first 8 months, the small cap and mid cap indices have underperformed by almost 15 to 20% to large caps, and 40% of BSE 500 companies have corrected more than 20%. We believe that valuations have become far more reasonable than what it was 7-8 months back. It's very difficult to, get the bottom in every stock. So we believe that over the next 6 to 8 months, the correction in the market should be used to own good quality mid-cap companies. Opportunities have started to emerge on a bottom-up basis selectively, and we believe that over the next 6-8 months, if we build a great portfolio of good quality companies at the right price, I think over the next 2-3 years it could reap benefits for most of the investors.
Okay, Pankaj, thanks for being with us on the channel, and we will touch base with you once again very soon. That's Kotak talking about the mood in the market, which doesn't seem to be too bad. I mean, after 2 days of a big sell-off, there is finally some amount of sanity on the screen. We'll take a short break on that note. Up next, we'll head to the JP Morgan India Summit in New Delhi to chat with some important policy makers. Do stay tuned in.